Hello viewers, welcome to Option Trading की दुनिया. In this brand new episode, let me tell you about the F&O curves that SEBI committee has suggested for controlling the retail participation in futures and options market. Let me explain in detail about some of the suggestions placed before the government, the RBI, with regard to curbing retail participation in futures and options segment. So now I'll explain the first important suggestion. So let me come here with the first suggestion. So first suggestion is to raise the minimum lot size of derivative contracts from 5 lakh to 20 lakh to 30 lakh. So raising the minimum lot size of derivative contracts from 5 lakh to 20 lakh up to 30 lakh. So now what this measure means for the F&O market. So currently we have, for example, Nifty. Nifty's lot size is 25. So suppose with the 25 lot size, the current Nifty is around 24,000, around 24,400 or 500 it is now. So you take 24,000 into 25. So it will roughly work out to be around 5 lakh in size. So according to the new measure, the minimum lot size from 25 may increase up to 100 or 200 in size. For example, 25,000 Nifty into 100 will add up to around 25,000 into 100. So up to 20 to 25 lakhs it will work out to be. So the contract size or the lot size will be roughly 100 in size. So what this is meaning for the retail investors? So naturally the size of the F&O contracts will increase. It becomes unaffordable. So retail investors cannot participate in such a big contract. So this will slowly bring down the trading volumes in especially the National Stock Exchange as well in PSC. And since the turnover in NSE is very high, so the volumes in National Stock Exchange will come down. So this will put hinders on the retail investors. So this is one thing. So now second thing is restricting weekly options to one expiry per stock exchange per week. So restricting one weekly options to one expiry per stock exchange per week. So which means that the weekly expiry, like we had in the good old days, Nifty's expiry was on Thursday. So like that, NSE will have only one weekly expiry. So all those punters who were participating in the weekly options now, for example, Monday Medicare, Tuesday Fin Nifty, Wednesday Bank Nifty, on Thursday it was Nifty, and on Friday Sensex, and then Nifty's next 200. So every day there was one expiry or the other. So all these punters used to wait for the last one now for the hero or the zero call. So that will significantly come down and it will affect the trading volumes in both the exchanges. So this is the second curve, and the gambling on this hero or zero call, the retail investors betting on certain things in the last hour will all come down. And the last measure is reducing the number of strike prices for option contract. So now what happens is, if you have a huge number of strike prices at each level, so based on a little money, the retail investors would bet on the calls and put at different levels. Now, when the strike prices are coming down, naturally they have to require higher margins, and out of the money, put and call options will all go down in the trade. So all this will again reduce the volumes. So these are the three important measures which have been proposed by SEBI in its uh, committee's suggestions. I think slowly and steadily, maybe in the next 2 or 3 months, these curves may be reality, and the F&O market volumes will surely come down, and it will impact not only the stock exchanges, it will impact the stock brokers as well. So therefore, so all those who are in the F&O trading, so please know that slowly and steadily these SEBI committee suggestions will impact you in the next few months. So trade accordingly. So thank you for watching this episode. If you are not subscribed to my channel, please subscribe, like and share. And whatever strategies I give through this channel are meant for educational purpose, and those traders who are trading take always the help of SEBI certified investment professional. So thank you.